Out everybody. Today we are going to be talking about how to separate your personal credit situation from your business situation. Now, this is pretty important to make sure that we keep these things separate. However, we're going to talk about that today. There is certain situations where you will want to use your personal credit as a cosign or to help jumpstart your business, but with a big plan in mind of moving away from that. Or if you're building your business, focusing on just moving away from the personal credit guarantee altogether. Now, let's go ahead and dive right in. First, to give you a brief understanding of really what business credit is, it will help you understand what we're talking about today. Now, business credit is credit, it's the capacity of a business. It's independent of the owners. Now, your personal credit and business credit scores can be radically different. You could have excellent business credit and terrible personal. You could have terrible personal and terrible business. You could have good personal and terrible business. It's completely separate. Building it correctly, especially building business credit correctly, preserves your personal assets as they will never be put on the line. The reason that we start businesses is for asset protection, separation. Now, as we talk about these things, you always need to make sure that you consult with legal, competent professionals to make sure that your situation is meeting the right needs for your business and tax purposes. But you must build business credit proactively. It takes time. It doesn't just happen on its own. You need to actually try to do this. Think of it as, say working out. You have to work out. You can't just hope to one day just be able to lift up 300 pounds. You'd have to get to that point. And so there's an old saying that says, dig your well before you're thirsty. In the case of business credit, just like personal credit, takes time, usually about 6 to 12 months to establish a very strong profile if you're on top of doing the steps that are needed. Now, separating your business profile, your business credit from your personal credit. When a business and your personal credit are not separated, then we run into a little bit of a situation. And for the most part, your business is just your personal credit. So if you have terrible personal credit, your business is going to have terrible credit. This is because you've already got a personal credit history when you buy or start your business. Literally, as soon as you come into America, whether you're born here or you immigrated here and you receive your tax ID number, your social security number, boom, credit's already started. I know I had some actually bad credit before I was even 18 because there were some old medical bills that I didn't even know about. Actually, I was under my parents' insurance and something fell through the cracks and boom, had bad credit. So it's when you're starting out in the world of business, lenders don't know. You're the unknown quantity. But you as a personal self, that's already been around for a while. That's been established. So that's all that they're really going to go off of. When you're talking to vendors, when you're talking to different lenders, they're going to latch onto your personal credit because at least they know what they're getting themselves into by working with you. And, your track record up to that point is really going to dictate the funding options that you are going to have available to you. Now, it's extremely important that you understand this, but then also you move towards separating that business and personal credit. If you do absolutely nothing to build your business credit, then your business doesn't, or let's say that you don't even have an EIN number. An EIN number is an IRS's identification number for your business. That's really the social security number for your business. It's how the IRS will keep track of you. Then if you haven't done any of that, you're not going to have a DUNS number, and that's your unique identifier from Dun & Bradstreet. Without your EIN number, without your DUNS number, there is absolutely no way to track or keep track of any financial doings that your business is doing, any accounts it has. So you will have no business credit, only your personal profile. Now, if we're looking at business credit, personal credit, and business failures, according to the US Bureau of Labor and Statistics, only about 60% of all businesses survive to celebrate their third year in business. For 4 out of 10 new businesses, 3 years, think about that, 3 years or even earlier is the end of the line. And you throw into a mix something like what's taken place in 2020, where come January it was, hey, the year of clear vision. But then now we see small mom and pop shops going under left and right, and it is brutal out there. And at that point, it might be a little bit too late to build your business credit. But the ones that started last year are in a different position. But then there's also that opportunity for new businesses to start. And so now's the time to take advantage of starting and building your business credit. Of course, you want to make sure your business isn't one of those that goes under. For more information on the Bureau of Labor and Statistics and looking at all of the failure rates and everything like that, there's a link there on the page. You can go and check that out if you want to cry. No, but in reality, there's a very important aspect to building business credit and understanding that finance, but then also keeping it separated from your personal. And we're going to talk a little bit more about how those not keeping it separate can interfere. So let's talk about bankruptcy. In a business bankruptcy, if your personal and business credit are not separated, you've been commingling funds or not keeping correct accounting, then once the business assets are thoroughly exhausted, business creditors then have full right to go after your personal assets, like your home, your car, your retirement money, or your children's college fund, unfortunately, and so much more. Really anything that's not a protected asset. Unless you enjoy haggling with the collection agencies, you do not want to go through this mess. Now let's take a look at if you have an EIN number, then the IRS will be tipped off that you've got a business. So now you got to start paying attention to that. And of course, they will look to collect taxes from your business. Unless you enjoy arguing with the IRS auditors, then you'll need to pay them. With no separation between your business or personal assets, you'll be paying them from your personal accounts. So, one thing I want to talk about as far as being a sole proprietorship, just going out there and getting an EIN number, not actually integrating into some type of corporation, company, a separate legal entity. Let's say that, you know, I'm out there, I'm doing landscaping and I'm starting a little sole proprietorship. I'm going to get my EIN number. Boom, we're done. Well, in that case, 1 in 7 of those businesses, those little sole proprietorships, are actually audited by the IRS. Now, they may not show up the first year. Actually, they're not going to. They're not going to show up in the beginning. They'll show up a couple of years later, and then they're going to want a full account of all the transactions. They're going to want to look through everything. They're going to want to go through every single expense line by line. We're talking, this is going to be brutal. You want to avoid that. If you look at the audit rates of actually incorporated businesses, like 1 in 50. So the benefit is to start to avoid audits by actually incorporating your company. Now, also, with no separation between your business and personal assets, your funds would likely be commingled. So, paying for things out of the exact same account. You're receiving your revenue into your personal account, paying things for the business, paying things for your personal side. Commingling funds are a problem when you try to claim your business deductions. Absolutely. If you claim improper deductions, then one of the top 3 reasons is not claiming your deductions properly on why a business would be audited. You really don't want your business to be audited, like we just mentioned. Now, more reasons to separate your business and personal credit are the personal guarantees. New business owners may feel obligated to use their personal credit and your personal guarantees. So, putting up your social security number, your good credit to cover the business expenses. So, let's say that you're using personal credit, personal credit cards or things like that. this can be a serious risk to trying to use your personal credit to fund your business and not using necessarily business credit. The risk of using those personal guarantees tends to grow as your business grows. So with growth comes bigger expenses, in turn, a greater personal liability. Something to watch out for. Another big issue is the utilization problem. Using personal credit to cover your business expenses adds to your personal credit utilization. Now, in the world of business credit, the number one factor is your payment history. That's primarily the only factor. On personal, we have payment history, which is, if we're looking at just a standard FICO 8 model, 35% is, can you pay your bills on time? Now, what about how much of your credit are you actually using? Are you utilizing? 30%. So in those two factors, 65% of your score is, one, how are you using too much of your credit? Or actually, are you using your credit, period? And are you able to pay your bills? In that much, that is your personal credit. So let's say that big expenses come into the business and you start maxing out credit cards, but then you're saying, oh, well, I'm paying them off each month. Well, are you getting that payment in before the end of the billing cycle? I mean, there's a lot of factors to this. And if you're maxing out those cards, boom, that could easily be crashing your personal credit score and profile, even if you're paying it off each month. I mean, realistically, we talk about the 30% utilization, keeping it around 30%, 30 to 50 to kind of maintain some growth and not really do a lot of damage. But any real balance on your personal credit is actually hurtful. You can still be growing your score up to a certain point, and that's usually what we talk about. But if you get into business and you start maxing out cards, things like that, because situations arise, you're going to be in a world of hurt when it comes to your personal side. Now, covering those business, actually, pretty much well exhausted that, but personal credit goes down with every hard credit pull is something else you need to think about. In addition, your personal credit can take a hit each time you have one of those hard inquiry pulls. So having it pulled a lot of times by banks or companies looking to do business with you can harm you or your personal credit. Now, is one inquiry going to destroy your credit score? No. But after you have several inquiries, then you're going to see denials, and then ultimately that can start to hurt your score. But if your personal and business credit are kept separate, your personal credit may remain untouched. This is because there's no negative effect on your personal credit from someone checking only your business credit profile. See, when you first start looking at building your business credit, you're going to see when you go Dun & Bradstreet, it gives you the option. Are you pulling this report for you or somebody else's business? It's very easy. If you want to pay, $100, you can pull the report on pretty much anybody. Can't do that on the personal side. I mean, without your knowledge, me pulling your personal credit report, I could go to jail for that. So you got to understand that there's a lot of business out there that is going to be also checking your business credit report. So you don't want an incomplete profile. Now, it clouds the true picture of your business finance when you actually commingle and not separate your personal and business finances and credit. Using personal credit to cover your business expenses can also skew your company's ability or your company's debt to income ratio, DTI. And if you're not quite sure what DTI is, we did a great video on this on Tuesday night during our credit banking mastermind. So you can check that out on YouTube and go through that little segment on really how debt to income ratio works. It makes it more difficult for lenders and potential partners to get a clear picture of your business's credit worthiness. It's uncertain because if you're having personal and business in there, it can get confusing. And I am talking from experience because when I first started, I commingled everything. I didn't keep anything separate. And it literally took years to get that worked out, getting accountants and bookkeepers involved and going back and 2 years later asking on January 2nd of 2016, you pulled out $50 cash. What was that for? I'm like, oh my gosh, how am I supposed to remember that? That was like, at the time, it was like 2 years before. You just can't remember these things. And then are all your receipts there? And it can become a mess and it can get out of hand very quickly. So other companies, they're gonna take this into consideration, especially like we said earlier, when they see that incomplete profile. So as we're looking at how it affects the picture of your business, commingled businesses and personal expenses can give the wrong impression about everything from your business's cash on hand to its expenses. Still, many startups, micro businesses, and micro business owners should still expect lenders to request their personal credit as well. So if you're starting out and you have no track record built, you don't have collateral, you don't have cash flow, and you don't have business credit, they're going to look at your personal credit. It's going to be expected. But as your company grows, it's going to become more established. And the likelihood that lenders and potential partners can rely only on your business credit alone is going to increase. Now, separating your business and personal credit with your business entity, taxes, and the liability. If there's no good separation between your employee-owned business and a corporation, then the corporate veil can be pierced. So what does that mean, corporate veil be pierced? So when you start a business, the reason that we're creating two separate entities is for that separation. That what this doesn't necessarily affect this. But if we're freely passing everything between each other and I do something, that means because there isn't this clear separation, if something happens over here, they can easily get to the business. And this can put you on the hook for things that you committed the business to, such as product liability cases, which are far than inexpensive. I mean, that's really wildly expensive. I mean, insurance can come into play, but that doesn't necessarily cover everything. It's as if you never even bothered to incorporate in the first place. So if you're not going to keep things separate, then what is the point of doing it? So get a separate business bank account. Having a separate business bank account is the easiest way to prevent the commingling of funds. Many banks will require your business to have an EIN number when you open that account. In general, if you get an EIN number after incorporating, let's see, if you're strict about using your separate business accounts for business needs and business needs alone, then getting a clear and complete picture of these expenditures at a tax time becomes a simple matter of reviewing your bank statements. Each and every business should have its own account. If any reason you did have some credit cards, there's maybe one credit card that doesn't have anything personal on it, only business expenses. You go over to squareup.com and they have a great little article there on 8 ways to separate your personal and business finances. So go check that out. Also, get a separate business address. Just like your business phone number, your address will go on marketing materials, loan applications, and more. A home address will tend to get you flagged as unestablished. Now, this is one of those things that is a little bit confusing, especially now that things have been changing during this year of COVID. Home addresses, we're not seeing the denials that we used to. And so there's a little bit more flexibility there. But if you have the option, office location is the best. Next, looking at a virtual office location would be better. And if you can't do that, then going with a home address. But staying away from any type of mailbox location, UPS stores, mailbox, etc., PO boxes. Now you can have that as a mailing address, but not as your business location. You'll need a brick and mortar address for that business address. So Here are 3 virtual office providers that we love: Alliance, DaVinci, and Regus. Those are different companies. You can go check them out, see what they have in your local area, and try to figure something out. You can buy packages which include administrative work, mail forwarding. If you need office space to work out of a couple days a week, you could rent out hourly or maybe just once a month or monthly. There's a lot of different flexibility and options for that. Now, getting a separate professional business email address is another thing you're going to want to do. You want your business email to be on your purchased domain. So the domain, www.yourbusiness.com, get it for your business and use that for your business email address. Don't use AOL, Yahoo, Gmail, Hotmail, all that other good stuff. Any of those free email services are not going to work out very well. Again, this separates your business from the amateurs and people that are just treating their companies like a hobby. In the eyes of potential prospects, customers, lending institutions, and more, you are going to look much better. Now, every U.S. Secretary of State keeps business information on its website. This can often include information on any grants or loans you may qualify for now or in the future. You can get information on any licensing that you're going to need and any continuing education that's required for your business. You may need to keep up with those licenses, especially, any type of professional trades are going to have some ongoing education and licensing requirements. Licensing isn't just to help you get and build business credit, but it's a huge factor in that. You could be violating the law if you practice your profession without a license. And also, it could be you just need a license, a tax sales license for the state that you're in. Now, to start establishing payment experiences, that's really what the history of your credit is. And it's the main factor when lenders and credit providers determine your credit worthiness. Making those timely payments will show anyone looking to do business with you or your company that you're low risk. Most vendors do not report to the business credit reporting companies unless you're late on making those payments. You might be saying, wait, only late payments? Yes. In the big world of payment reporting, in the business side, about 7% of all accounts report positive activity. The big downside is almost 97% are going to report negative. So basically, everybody can easily report the negatives, but very few will actually report the positives. That's why it's so difficult to actually get those payment experiences on your business credit profile. Currently, we're tracking over 100 accounts that are able to be achieved without your personal guarantee and still be able to show up on the business credit reports. So you want to start and establish that payment experience. Buy from vendors who report on business credit reporting bureaus. That's how you're going to build your business credit and truly separate yourself from your personal credit. Here are 3 vendors that will report when you pay on time or early. Crown Office Supplies, go crownofficesupplies.com, go check it out. uline.com, Granger Industrial Supply. Now, Granger, we've noticed some new changes with them. Granger is now requiring about 12 months of ongoing business before they really are going to extend you some lines of credit. So these are things that you need to be cautious of. And with everything that's changing, it's changing so quickly. Our job is to track the data. Our job is to track and see who's doing what, how things are changing. And when there is a shift in approvals or in companies, we're there. And so in the last week, there's been actually 4 new accounts, which is fantastic because as some stop reporting, new ones are seeing that there's an opportunity there to start reporting. And so new businesses pick up. And so we have an ongoing, continuously updated list of accounts for you. So to recap a little bit about what we talked about today, separating your business and personal credit matters. It really does. It protects your personal assets both now and later. And imagine if you ever wanted to sell your business, what are you going to also give them all your credit cards with your personal guarantee? Now, if you're going to use your personal guarantee, also work on building your business credit so you can move away from those credit cards that have the PG. It can help protect your personal credit score. And building a separate business lays the foundation for your business credit building, which in turn is the best way to truly separate yourself from your personal credit from your business. Now, we can help you build business credit and keep it separate from your personal credit once and for all. So reach out to us. Go to wiseguysinties.com. Give us a call, 888-524-9273 for a free business credit startup funding consultation where we can talk about, hey, what are you working on? What do you need to do? And are we even a good fit? I mean, that's really the first thing. You got to figure out if our service is the right service for you. And if you are looking to gain access to high limit credit cards, high limit cash credit cards, the Visas, the MasterCards, American Express over, the next year or two without using your personal credit, then reach out to us. If you're also looking at utilizing your personal credit to jumpstart it, or you need help and guidance on where to go to get repaired, give us a call. Shoot us an email or schedule on our website. Other than that, I want to thank you all for being here today. Huge shout out to Lorraine, Monique, Raul, Paul, Will, Jake, Matt, and Mike, who thank you guys for being here, and gals. Also, for everybody that tuned in on YouTube, I see Jesus on here. Man, Jesus, it is good to see you. Haven't seen you in a while. I hope everybody had a wonderful Thanksgiving and is enjoying this Christmas time, the season of giving, the season of caring. Go out there, be safe, love one another. Okay, yeah, sorry, Raul had a question there. Yeah. You know what? Oh, Raul, we haven't talked since we got this other stuff together on this free personal credit repair. So I'll just go ahead and shoot you the link to get started for that to your email. But yeah, hey, if you guys are in any kind of situation where maybe you have some old negative thing on there that just doesn't seem to go away, work on trying to get that off, and we can help you out with that. All right, folks, we look forward to speaking with you. Have a wonderful week, and we will see you. We'll actually see you tonight for a real estate investing mastermind. Good night, and God bless.